Hey guys, John here with National Rental Services. Just want to give you a quick illustration as to why there is not a double tax on this program with our program bonus. And then also to just kind of discuss the implications or the comparison between doing a monthly stipend versus getting into a plan that actually gets you a house later. And maybe even considering what the difference is between doing the Watford City housing program and just buying a house now using the stipend if you have that ability to do so. But at the end of the day, just recognize that we're not here to sell the program. If it works for you, that's awesome. We want to help you out. If it doesn't work for you, then we're the first ones to tell you, hey, do what's best for your family at the end of the day. That's what's most important. But let me kind of give you a quick illustration of why, first of all, we're not getting double taxed here. So at the end of the day, the IRS is going to look at any kind of financial relief that your employer would provide, or for that matter, if there was any money that came to you in any way, whether it's a benefit or a lottery winning or whatever, you're going to get taxed on that income. It's going to be treated as income. So in this particular case, let's forget about the Watford City pilot housing program for a second. Let's just say that you were going to pay rent on a house for 3 years, and then you were going to put some money down to buy the house, or a different house for that matter. It wouldn't matter. But the point is here, you have two things that we're talking about that the IRS says that you would pay in that scenario. You would pay rent in the first 3 years, and you would pay a down payment for the house after that 3 years was over. The first part of that, if you got any relief against what you paid in rent, let's call that rent relief, that would be taxed. And if you got any help on your down payment later, that would be taxed. So it's actually two different things that we're talking about here, that if anybody helped you, whether it was a family member giving you money or if it was a company offsetting that cost, you would have to pay tax on it. So let's take in this scenario, put some numbers behind this that we'll compare. So on year 1 through 3, if I'm paying $2,500 in rent, which would be about market rent for a 3 or 4 bedroom in Watford City, single family detached type property, new construction today, that's about where we'd land. So if we're paying $2,500 a month in rent for 3 years, we're going to pay a total of $90,000 over that 3 years, or $30,000 per year, right? And we would have had to make a little bit more than that in income, pay tax on it, and then we would use after-tax income to pay those rents, of course. So over 3 years for that first component, the rent, we would pay a total of $90,000 out of pocket. Then let's say we wanted to buy a house, whether it was that house or a different house. We would have to put down, let's say we put down 72 grand. And I'm only using this number for example's sake because it's a comparative to what we're going to be doing with the Watford City housing program. Let's say that I had $72,000 in addition to what I was paying in rent that I saved up, and I put that $72,000 as my down payment. Then in all, I would have put down a total of $162,000 that it cost me to rent a place and then to put down payment money on it later. So I would have literally had to have earned, if let's say that you have a withholding or a tax obligation of about 25%, just to use easy numbers, then I would have had to make $216,000 for me to have done this scenario right here, to have the money, after-tax money, to pay $90,000 in rent in those 3 years, and then $72,000 towards a down payment on the property. That's $162,000 total obligation. Remember that 162 because we're coming back to that, okay? So now let's compare apples to apples. Let's say that we're going to do this inside of the Watford City housing program. In that particular case, we're going to take that same $2,500 market rent, but in our program, we would only be paying about $2,000 per month for that house. So what you see in green here is the relief that the company is providing. It's essentially treated as extra income for you because they're footing that. And that's what we're paying a tax on, that what we call the rent differential there from market rate. And we're coming out of pocket $2,000. So in this scenario, each year, $6,000 is what we would pay tax on in this particular property, and then we would have about $24,000 that we would pay out of pocket, just like a regular scenario. That's after tax. So then over the course of those 3 years, at the very end of that 3 year, we're going to buy that house, same scenario, for $72,000. Because we calculated that $72,000 based on what you paid in rent $24,000 each year for those 3 years. That totals to $72,000. So in this particular case, the company was helping out on the rent component of this, the $6,000 per month. I'm sorry, $6,000 of that per year, your total rent per year, because the total rent obligation on this at $2,500 per month is $30,000. So $6,000 of that was basically covered by the company, and you pay tax on that rent differential, and you actually would have already paid that $24,000 on after-tax income. So then at the very end of that, when you buy the house, because the $72,000 is gifted to you, then you're paying tax on that later because that's part of that $162,000 total obligation. So basically at the end of that 3-year period, we have, of the $162,000 total cost to do this scenario, we had $24,000 each year that we paid, and then the company essentially took care of the $6,000 per year, which is $18,000 total, plus the $72,000 down payment on the house. Now, the question then is, well, how come the money that I'm paying in here on the rent can't just be put in an escrow account or something and then that be used as my down payment later? Well, if that was the case, then you would have had relief on, you wouldn't have had this tax obligation on the $72,000 over here because that's money that you paid after tax, but then you would have had to pay tax on this $24,000 each year. So either way you look at it, the IRS is going to say if you're either going to have to pay tax on that amount of money up front, which you don't have to, or you're going to pay tax on it as down payment relief later. But either way you look at it, it's money that you didn't have to come out of pocket for, that the company is taking care of for you. So in this particular scenario, you've had a total of about $90,000 of that $162,000 total cost as your benefit through the Watford City Housing Program in this kind of standard case right here. The question really becomes, does a stipend equal a better scenario for me, or does using the Watford City Housing Program to get into a house work better for me? And that's something that we're going to have to analyze on a case-by-case basis, but if you just want to really bring it down to the simplicity, when we have to pay tax on a benefit, well, that means we just got more benefit. So we're paying, in the example of paying 25 cents on the dollar in tax because someone gave me $1, I'd take $100 all day long if I have to pay $25 of it in tax, right? So at the end of the day, if you just want to look at apples to apples comparison, very simple contrast, with the Watford City Housing Program in that particular scenario, you get $90,000 of total benefit from the program between the rent relief we got each month and then also the down payment on the house later. That's total $90,000 that we have to pay tax on, essentially, in addition to our income because it's a benefit. And then with the stipend, if we're getting a $1,500 stipend, and if that stipend is going to last the whole 3 years, then we would have gotten a total of about $18,000 per year, is what 1,500 times 12 months translates to. And that's a total benefit of about $54,000. So if you just look at benefit per benefit, forget about getting our credit fixed, forget about getting into a house and having a plan to get into a house and rooting ourselves, forget about those intangibles for a second. Just dollar for dollar benefit, you get much more benefit with the Watford City Housing Pilot Housing Program than you would just with a stipend. And then the stipend, again, more important than anything, is not a plan for home ownership and doesn't get us financially correct if we're in a situation where we can't buy now. So for those of you then that can buy a house right now, question is, well, what's the benefit of doing the housing stipend then versus the Watford City Housing Program? And essentially at the end of the day, again, your total benefit is going to be better with the Watford City Pilot Housing Program, but here's a distinction. You don't have the house price risk. So my question to somebody who can buy a house right now and is wanting to do that would be, do you want to absorb the house price risk over the 3 years? If you feel that home prices are going to go up over time, then buy your house now, you get the equity later, and there is no risk, right? But if you want the company to burden that risk, meaning if the property values go down over time, well, that's not you taking care of that. And then at the end of the day, you also got your credit fixed, and then you also got mortgage ready. So whether it was this house or something else, even if you didn't take advantage of this, your still total benefit is going to be higher. So that's just kind of a quick contrast between the two. But what I'm going to do is I need to understand a little bit more what the housing stipend is, how long it's going to last, and that kind of thing. And then what I want to do for each of you individually is put together kind of a plug and play calculator. And then you will input your own assumptions in what my housing price is going to be later versus what it is today, what my rent is going to be per month on this house, market rate versus what I would pay through the housing program here. And then it would translate basically apples to apples comparison, what's going to be better. But I can tell you that if you don't want to absorb the housing risk from now until later, you let that be the company's risk so that you get the better price of either today or what the appraised value is later. And then you also get a total benefit that's higher than the Watford City Pilot Housing Program works. But, you know, on the other side of the coin, if you're just, hey, I'm not really wanting to do anything permanent here, then, you know, take advantage of the short-term stipend, but the total tax benefit isn't going to be helpful for you as much long-term. And then, again, we're not getting in a position where we're leaner long-term and have a plan. So really, this is a housing plan. It's not for somebody that just wants to offset costs short-term. And it works out really well if you have that long-term perspective. But again, we're here to do whatever works best for you and your family. We're not here to sell the program. Just want to make sure you do make the decision based on apples to apples comparison or financial logic. Anyway, if you have any questions, you know how to reach me. Talk to you guys soon.